Do you think that's a change of character or a market shift? Let's find out. Well, it isn't. In this video, I'll be teaching you exactly how you can avoid these fake market shifts or change of character and become more profitable in your trading journey. Welcome to Alpha AJ Trading. If you're serious about mastering smart money concept in trading, make sure to like, subscribe, and turn on the bell. Today, we're diving into a powerful but often misunderstood concept, the change of character or the CHoCH. It's one of the most popular tools in the SMC world, but it's also one of the most abused. Just because you see a structure break doesn't mean it's time to jump in. And that's where most of the traders go wrong. Let me show you why a change of character alone isn't enough to make you consistently profitable. So to put it very simply, a change of character is when market breaks its most recent structure. For example, in this uptrend or bullish trend, you can see price creating high high, high low, just like so. A change of character happens when price breaks the most recent high low. Similarly, in the case of a bearish market where price produces lower high, lower low, just like so, a change of character happens when price breaks the most recent lower high, just like this. So, is it possible to avoid fake CHoCHs? Well, the honest answer is both a yes and a no. You see, trading isn't about certainties, it's all about probabilities. No setup is perfect, but your goal is to tilt the odds in your favor. That means you won't avoid every fakeout, but you can reduce them significantly by relying on strong confluences. Well, what's a confluence? Confluence just means combining multiple pieces of evidence that support the same trade idea and not just reacting to one signal. Think of it like a checklist before making a decision. The more boxes you tick, the better your edge. What are the confluences that I look for? Number one, high time frame narrative alignment. Second, liquidity grab slash a stop hunt. Third, a clear market structure break. And last but not least, displacement candle slash a momentum confirmation. So let me show you a sample trade on gold here, and how can we use the four confluences that I mentioned to build a bias. So let me just bring this here, starting off with the higher time frame, uh, weekly in this case. We can see price action on gold is very bullish. It pulled back a little bit, and then here it was clearly holding this sort of demand, and we also see a very nice change of character or a break of structure on the weekly time frame, like so. However, when price came all the way to the top, it started to react off of this weekly supply. Let's go down to daily and see what price is doing. As you can see, it's kind of holding this. It's not too clear. Yeah, on the 4 hour, it's very clear here. We can see a clear change of character on the 4 hour, and price is holding this daily demand. So we can anticipate price to at least take this high before heading back down or continuing to the upside. So either way, we'll be able to capitalize on a short-term move rather than anticipating a, you know, a move, a long-term move. For example, let's say this was the weekly supply and price gave us this move to the upside. So we can say, okay, price is holding this level. It might give us a corrective pullback like so, right? Or after giving a pullback, so it's going to do either one of those things. Like it might continue all the way to the top or go back down. So either way, we managed to, we'll be able to capitalize on this move to the upside. So let's have a look on the 4 hour again. Gave us a change of character, came aggressively to the downside, but it's clearly holding this 4 hour demand again. So if we see a change of character, yeah, we see a change of character right here. We could have entered off of this level, but obviously price went up. It swept this wick, which is the next liquidity level, and yeah, it came down and it's holding this sort of level. So let's just quickly go back to the checklist. So number one was higher time frame narrative alignment, which is bullish. So let me quickly put a check to it, like so. So next one is liquidity grab slash stop hunt. Actually, let's just go to 15-minute, right? In terms of the liquidity sweep, because we're looking for buys, what I am anticipating is this is a liquidity sweep right here. And we got a change of character on the 15-minute, very nice change of character right here, right? So number two on the checklist, which is a liquidity sweep, is right here. So let me put a check to that one as well. You know what, I'm just going to bring it here. Checked. Liquidity grab checked. Next one is clear market structure break. So we do have a clean slash clear change of character after price swept this bit of liquidity in this bullish leg. So this is our change of character, and again this is as you can see, this is a very nice bullish engulfing candle or a displacement slash momentum candle, which is number 4 on our checklist right here. Where'd it go? Where did it go? Oh, sorry. Okay, so that's also checked. And for displacement candle I just mentioned now, we also see a check for that too, right? So the only thing left is entry. And in terms of entry, what I like to do is wait for price to give us some liquidity, show us that it's building liquidity like right here, and we can enter right here when price wants to come down and sweep that bit of liquidity. So I will place my, 1 second, let me just change the color. So this is our entry area. I'm going to put my entry right here. Stops just below this wick, like so. And for target, we can target all the way here. This would be our first target. Or we can go crazy and target all the way to the top, like so. Obviously, this wouldn't be a very realistic trade. So in my opinion, if we just go for a target, probably a 1 2 3 1 to the middle of this fair value gap. Let me just mark this. So we can probably target the midpoint of this fair value gap, and let's see how price goes. Wow. So it just taps in and you can see an instant reaction, and yeah, continues straight into our take profit. And what would have happened if we were to target all the way to the top? Let's see. Yeah, I mean, that's the thing. I mean, we could have targeted that, but in my opinion, from my back test and from my experience in trading, it's not very realistic to target all the way to the top here. Even though we are pretty sure in our high time frame bias that price will at least go to this 4-hour high, take it, and may continue up or reverse back down. But either way, uh, this was a good sample trade I wanted to show you guys because it checked all the 4 confluences. All right, let's go back to the trade I showed you at the start of this video, the one that hit stop loss. So looking at our confluences, the first one again is the high time frame. So if we go out to the daily time frame, you can see gold is clearly very bullish. So it would be a very bad idea to look for sells given the amount of buying volume coming in the market. However, um, obviously, I wouldn't consider trading for sells after seeing this bullish narrative, but let's consider, for the sake of this example, that the price action, the high time frame price action is bearish. If you move down to number 2, which is liquidity grab and stop hunt, in this case, we don't see price sweeping any liquidity in this area. For example, going back to the trade, which I showed earlier on this video, you can see price came down, it swept this demand, and then we see a change of character. That doesn't happen on this trade, so that's another no. So let me just actually cross this out. So high time frame, not there, right? Liquidity grab stop hunt, not there. Do we have a clear market structure break? Yes, we do. So that's a yes, like so. Next one, displacement candle slash momentum confirmation. So in terms of this change of character, we can see this big engulfing candle come in and play, but when I wanted to go through and break the structure, it showed rejection like so here, meaning the buyers are coming back in the market and selling is getting weak. However, we still see a change of character, but it wasn't a big displacement candle giving us a change of character. Again, going back to the same example, we see a change of character happening when price doesn't hesitate, it just goes straight with this displacement candle, and that's when we get our change of character, which obviously is not the case here. So that's another no. So like, right? You made this far in this video, shout out to you. You're clearly serious about leveling up your trading. We've talked about CHoCH and 4 key confluences to avoid fakeouts. But here's a bonus tip. Understand efficient versus inefficient price action. Efficient price moves are smooth and balanced like overlapping candles. But when price moves too fast, it leaves inefficient gaps, areas where not all orders were filled. These are imbalances and price often returns to them. So in this case, you can see price did not create a clear area of imbalance. I'll go back to the previous trade again. With this impulsive candle, we see this zone being the imbalanced area, which is likely to be tapped in by price, and then we see a clear reaction from here. Obviously, in this case, if you go down to 30-minute, we don't see any inefficiency. This, in my opinion, is all efficient price action. So when price pulls back into an inefficient zone and it lines up with your confluences, it can be a powerful entry point. And I'll break this down properly in another video. But so to sum it up, inefficiency is an opportunity. It is where price has moved too quickly, leaving behind an imbalance. These zones often act like magnets, pulling price back and giving us a high probability trade setup. Mastering how to spot and use these zones can seriously level up your entries. If you found this video helpful, make sure to like, subscribe, and turn on notifications. It really helps the channel grow. I'll see you in the next one. Thank you.